Hi and welcome to StockInvest.us podcast for week 36. Last week, Nasdaq fell 4.2% and that's the third week in a row Nasdaq's been falling. And over the last 3 weeks, Nasdaq is down 10%. In last week's podcast, I told you that I thought it would be a red week ahead of us, but that we are getting close to a bottom. Do I still mean this? Is that still the case? As you can read in the news, everyone is telling that now it will just get worse. I'll try to tell you what I think. We will have a quick look at the charts, and of course we will have the trading tips. And last week's trading tips, one of them, Rogers, actually went in green. Some of the others struggled a bit, but we will get back to that. This and much more will follow, but first you have to listen to the disclaimer.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Last week's podcast became a very long one. It was about 1 hour and the longest I ever made over these, getting close to 2.5 years. But you can rest assured this will be a much shorter one because I gave the reasoning for most of the things that I will tell in this podcast I gave last week. So just be a repetition. If you didn't watch or listen to that podcast, I recommend you to do it, because it gives an insight in what I believe and how I think about things. And if you follow the news, because last week I told you about the energy crisis, I've been telling you about this for more than a year. I think it'll even get close to 2 years. I told you how things will stack up, what will happen, that there will be inflation, that interest rates will go up, and the job numbers will start to go up. To fall, and that actually happened last week. One of the reasons why you had a bad end of the week was because finally job numbers were weakening, and that will just continue forward. But the main topics in the news last week were energy crisis. You could read everywhere: Sweden, Finland, Norway, Netherlands, Italy, protests in Italy, and everywhere it's energy. That's the main focus. And that was no surprise. As I told you, these things will happen. You will have a focus on it. You can even play on it if you're a stock trader. You can find energy companies, you can invest into option derivatives. There is a lot of products you can play with related to energy. And rewinding back more than 2 years, I told you oil, especially oil, will do good, and that I invested into oil, and that's been just an amazing journey. So there is a huge opportunities if you are able to foresee the things before they happen. You get into the markets before things really start to move, because last week energy really started to move. We're setting triple, double, quadruple records everywhere in prices, and the screams in the media was extreme, and they just continue. And these things causes of course the politicians to do things, and one of the things that the politicians are doing across all of Europe now is promising support money. We are in a situation we have already very high inflation. It has been slowing down a little bit. US was moderate in last month, and some of the European countries was even moderate. It's very high. It's way too high, and as I told you, the only way to fight inflation is to take consumption down, and usually you do that by interest rates. But we see increase in interest rates, but now again governments will pour a lot of money into the markets to help with energy relief. That will for sure not help inflation. It will make inflation stay, and inflation is measured over a range of things, energy being one of the highest. And with screaming energy prices, do you really think that the inflation numbers will go down, or will they continue upwards? As I told you, I think that they will just continue upwards, that we are not done yet with the pain. There is much more to come. And we will also see that they just have to increase interest rates at a much faster pace and harder pace. All of these things are happening, and I think they will continue for some time more. At the same time, I told you in last week's podcast, and I even gave the title "The Return of the Green Markets." I told you in last week's podcast that I believed that last week would be a red week, but that we are getting close to a short-term bottom. And we will very, very quickly look at the charts. And you will see exactly why I think this will happen, why we are again in a good position for short-term gains, and in these markets which is falling. And I told you these are the markets that I like the best. You just have to be constrained, you have to be very restrictive and very disciplined. You can make good money because markets are at this point extremely oversold. That means with high likelihood there will be a bounce up. Many stocks are heavily sold, and when they get the rebounds they will have that 10, 15, 20, 25, 30, even 50% gains. So we are, in my opinion, at that situation. But before we look at the chart, quickly run through the fundamentals. And they are not really big at all. It's a quiet week ahead of us, and some I think before the start of the last green periods we had the same thing. Markets, there were no really big thing, and I told you it's a good thing that there is no big thing coming up, that we are heading for a quiet week is a good thing. That's exactly what you want. I see the same pattern now. There is no really big fundamental news coming this week. There are some quarter results. If you are into GameStop, they will be on Wednesday, I think. Fuel Cell, interesting company, will be on Thursday, and Kroger I think also on Thursday. And these are interesting, but they will not affect the market in any way as I see it. They are not big enough to scare the market, but you can do some nice trading in each of these if you are able to predict what will happen after. StockInvest.us, you can type in the ticker. You will get up, if we have the data, you will get up earnings report page where you can see how things move historical for quarter results, because some of these companies have a very certain pattern where they fall just before quarter results and rise immediately after. You can use these and other things trying to figure out what direction will be, because usually after quarter results or even before quarter results there are things happening in this market. So there is 3-4 interesting companies, and as I told you, Fuel Cell is one of them. And of course the meme stock GameStop is there as well. There will be some other numbers, but nothing really special, and I like it. So we have these external factors. It's the Ukraine war, of course, it's the Taiwan conflict, these huge geopolitical things. If anything really bad happened, that will affect the market. But in general, there is no big fundamental things as I see it. Oil fell by 7% last week, 8% last week, $7 to $87, currently trading around the 87. And that is good news for the stock market, believe it or not. It may not be so good for the oil stocks, but in general for stock market it is good, because it's related also to inflation and correlate with different other things. I believe oil will continue up. 2 years ago I told you, or 2.5 years ago I told you that then oil was trading at $20. I said just buy oil stocks for wherever you have, because that will be an amazing journey, and it has been. I had a target and told you it will go past 100, went up to 120 and has then been falling down. A lot is due to United States opening their oil reserves. They are trying to push everyone to produce more oil, and that kept the price at current level. But I also told you that I think there will be a new high coming, and that we might see oil up to 200. I still believe that. I think it will happen this winter, maybe November, December. It could be a little later. We have to see how supply demand goes. Reasoning for this is they are shutting down the gas. As the gas deliveries get less, you have to use alternative fuels. Oil will be one of them. I think that will put oil under pressure. We have this geopolitical situation where now it's the East against the West, and a country like Saudi Arabia is not on the side of the West, and they will even use some of this situation for a slight revenge. For them, high oil price is very good. It means that they have to produce less oil to get more money. Why would they increase production, getting the price down? When they can produce less, keep more of the oil in the ground for high prices. I don't see any reason why these countries really would push it up. They will see and even smile as part of Europe's struggle with inflation. Oil, I think it will just continue up. So far it's moving between $85 and $95 for many weeks. I think that we will see a break soon. You can of course agree or disagree, and if you agree, it might be an idea to get into some energy related stocks. Gold, $1,722, down $13 last week, being very steady. I think very soon we will also see movements in gold again. The last number before we will get to the technical part, before we will get the charts, is the 10-year treasury yield. And the 10-year treasury yield, as I told you, it will just continue up, and last week it jumped quite much, 5% up last week to 3.19. If this number goes up, stock market goes down. That was lesson number 1 many years ago, and it's just staying that way. Market went down last week, treasury yield went up last week, and I think sadly this will continue. But let's get to the charts, because as I started to say last week, I told you that we are returning to green markets, and I will argue why. And the best way to do this is to show you some charts so you can see what I say. So if you're listening to this on Spotify, or you're listening to this on Apple, or wherever you are, this podcast is also available on YouTube, where you can see me, you can see the charts and the things that I present. And we will do that just before looking at the charts. At StockInvest.us we analyze more than 38,000 tickers. 23,000 plus of these are qualified for something called signal analysis. And this is a number I often refer to, telling you how many buy signals there are in the world. And right now there is 23% from all the stocks that we analyze that are qualified. 23% is giving a buy signals. In week 33 it was 44. I told you it's way too high. When it's this high, you will have a reaction down, and as you know, we now had 3 red weeks. Is 23 low? No, 23 is really not very low. It can be very low. The last time we had a huge reaction up, it was down to 17, 18 I think. But if we go to Nasdaq, Nasdaq has only 16%, and that is really low. And looking at New York Stock Exchange, only 10%. That is very, very low amount of buy signals. Every time we see this pattern, there is a reaction up. London, 14%, and Tokyo, 27%, and China, 23% buy signals. All of these are now on the very low end. But you have to remember, when things are very bad, I told you when things are very good, things can continue upwards. When they are very bad, they can continue downwards. Usually you see in these either bottom or top, you see accelerated volatility. Volatility just increases. You see a lot, much more movements. It's not only down 1%, it could be 3-4% down in just a single day, because you are in the territory where things really get fast. Volatility increases, and you have that huge fight between greed and fear. Anyway, whenever numbers are this low, you have an upturn. But let's not waste more time. Let's have a look at the charts to see what I mean. And we will actually this time start with the long-term chart, because there is a few things that I like to show you. And one of the main things is the things that I tried to argue last week. There are signs that we might turn in the middle of the trend, because in the long-term trend, Nasdaq is trending down and everything is indicating that it should continue downwards. Usually, if you want to break this trend and get into a longer period of upturn, you want to turn in the middle of the trend. And now we are in the middle of the trend. At the same time, the relative strength index is only 14. I haven't seen this low for Nasdaq for ages. Last time it was this low was back when the pandemic was, beginning of pandemic, when it was an obvious buy situation. I see the same thing now. You have to remember that it can fall even faster, because now it can fall very fast to 11,000. That can happen in just a day. When things are oversold, they usually react too fast, and there may not be very good reasoning for it. It's just that panic mood. So we are there where things can move very fast, but we are still very high up in the falling trend, and that's the one thing that I wanted to see. Because if the market now turns, which I believe they will do, we will have that very first chance to really break the falling trend. Will it happen? I don't know, but we will for sure will have a chance. It will give us a huge indication how the next half year to a year will be. So looking at the long-term chart, that super low relative strength index, good support below, indicate a very fair chance that we are heading for a upturn over actually several weeks. Will it start this week? I think so. I will argue why, but in general that's the thing that you can see in the chart. If we move to the 3-month chart, the shorter chart, we see that Nasdaq actually been in a rising trend for several months. Just broke the trend downwards, but that doesn't mean that it will go back to a falling. It just means that it either will be a wider trend or horizontal trend. Again, relative strength index is extremely oversold, only 14 also for the relative strength index 14 days. And this is, every occasion it's been a buying opportunity. I don't see why it should not happen now. We are at very good support. Does market turn today? I'm not sure, because it was so negative on Friday, meaning that we can have that continuation of that negative market being oversold. We can have overreaction, so we can have a deep fall. Things will get very scary if we fall below 10,600, because below that part there is no real support, and we can have huge, very desperate falls. Likelihood for that to happen, I don't see it in my world. When the relative strength index is this low, we have a good risk reward. You just have to find the right entry point. When will you enter? I believe if you enter almost any stock now, and if you can sit for a few days, I think there will be good chance for a nice return. At the same time, there is plenty of resistance above, meaning that there will not be any real fast, strong upturn. You will have that oversold reaction going up. Usually that's a good one. Few days where markets move very nicely, it could be 2-3% on a single day up. But after that it should struggle a little bit, and we will see, will it be able to continue within that upwards trend, or will it go for a more horizontal trend? I would say risk reward as we see it now is very attractive, and these things mean a little bit for the things that I would say in the trading tips. because how do you play these markets? Well, when things are very high, like it was 3 weeks ago, I told you things were way too high, you're heading for red markets, you usually like to reduce your positions. And now, as we're getting oversold, it might be time to start increase a little bit. And I'm saying the opposite of what you read in the news, because everyone is now telling that now it will be really mayhem. We will see who are correct in these things. Trying to come to a conclusion, will it be a red or will it be a green week? Well, I will just recommend you listen to last week's podcast. I said so much of the things that I think there. I will not repeat all of it here. I gave you the reason last week. I thought it would be a red week, but that we are heading to a bottom. I will stick to that. I think this week will be a green week. I will base this on the technical picture. There is no big fundamental things as I see now that can really change the market. I think that the fundamental picture is okay, no big news, a silent week expected ahead of us. Things being oversold implies the huge possibility for a nice reaction up this week. I'll not be surprised if we by end of Friday we'll be back above 12,500, and you will again read in the newspaper that now it's a good time to buy. But before that happens, be aware it can be very, very volatile, very much up and down, and in a situation like this, things can go from bad to even worse. It's no guarantee, it's just a general picture. But again, Nasdaq relative strength index 14. Historically, this is just a super buying opportunity. We will head for the training tips and see how the training tips did last week and what are we trying to do this week. So we are at the final part and the trading tips. Last week I gave you 2 tips. It was Rogers Corporation and Alphatech Holdings, Artec. And these 2 tips, because I had a few trades open, but Roger and Alphatech was the 2 new tips. And let's just start with these 2. Rogers, I got Rogers for $253 on the Monday. And during week it was just moving up. I think it was up at almost 260 at high, fell a little bit, but ending the week at 257.37. Still in the portfolio, it's up 1.72%. So that was a good trade. But Alphatech Holdings were not that good. I got in at Alphatech at 775. Things were looking somewhat good. I think it moved upwards to 790ish and then started to fall. Using trailing stop loss 5%, when it fell below 755, it was simply sold, giving me a loss of 2.58%. So from the 2 new tips, Rogers and Alphatech, Roger is still in the portfolio. It's up 1.72%, but Alphatech was sold with 2.58% losses. And knowing that Nasdaq fell more than 4%, the combination of these 2 is quite okay, I would say. But we had a few other open trades. What about them? One trade which I opened in week 30 was Chevron. I got Chevron at 139. I told you to get into Chevron and I thought it would do very good. And Chevron just been pushing up. And last week it pushed above 160. Then started to fall down and eventually was cut by a 5% loss, stop loss. But that was at $158, giving me 13.78% profit, almost 14% profit of Chevron. So the Chevron trade that we started in week 30 is closed. It was really good. Is Chevron a buy now? I think so. I think that is possible to get in again and do good. But for the trade that we started at, we followed the discipline, we put on the stop loss, had a very wide stop loss for Chevron. 5% is quite much. But it turned out successfully, leaving 13%, 13.78% profit in a market which has, as I told you, Nasdaq been down 11% at the same period. Dow Jones, not so much. Lockheed Martin, that turned out to be a bust. Bought Lockheed Martin in week 33, $434. It moved up a little and down a little, up a little. Eventually it was closed by stop loss last week, not managing to hold the market. Was sold at 420 with a loss of 3.9%. And that is over the last 15, let's see, over the last, it will be 18 trades. That's the fourth trade which has been closed in red. The rest of them has been closed in good green. Again, it was trailing stop loss, helping the loss to be only 309. Of course, I could sit and most likely Lockheed Martin will now get into a very nice period of upturn. But you never know. Even though I say markets are oversold, everything is indicating that we should push strongly upwards. We're still in the situation where things can get bad. You never know. So stick to the rule. And I had a stop loss and it was just cut by stop loss. So it is out. Then there is Sumedica. And as I told you, we got Sumedica a few weeks ago, did amazing. I think it was some 30%, 30+%. It was cut by, it was 34.53%. We bought Sumedica in week 21, was very patient waiting, and it had a very nice run, was sold at 30 cents, giving 34%. In week 34, I told you to get Sumedica again. It was I bought it at 26 cents, and as told you, I will not put the stop loss because this is way too volatile stock. It's just a stock that I will keep. So far, that trade has not been good. It's down 14%, currently trading around 22.77 cents. But I'm not worried at all, and I'm pretty sure that Sumedica will go up. But so far, it is the biggest loss I had in any stock for more than 1.5 years. But I'm pretty sure, as I said, it will get back simply because the cash value is higher than the stock price right now. So as we speak, the following trades are open, was not closed last week. Sumedica and Rogers are still open in the portfolio. What about new tips? What will I play this week? I told you it's a fair chance, in my opinion, for a green revenge this week. Things being oversold, I think they will do good. At the same time, I will not go too risky in the market. I just told you there might be a fair chance that things can go even down. So I will not go into these high risk stocks because if I'm wrong and markets continue down, they will fall even harder. So I'll play a little safe, but still in stocks which I think can do good. So here are the 3 new trading tips for this week. First one, Apple. I think there is a fair chance that Apple will do good this week. There is product launch, I think Thursday. Very interesting, should hype around Apple. It's always exciting when Apple is releasing their new phones and new gadgets. Being in the bottom of the trend, being oversold, I think it's a fair chance that we can have a reaction up and that there should be some safe money to be made in Apple. I will not use gearing, no nothing. It will be a cash buy. I will put a suitable stop loss and I will figure out what it will be. It might not be 5%. I think that will go much lower than that, maybe around 3% or something. I will try to figure that out based on the volatility, but I will get into Apple today. If I'm lucky, I will get a cheap buy in the morning, and I think that by the end of the week, that might just reveal a return. Sorry, not reveal, but return anywhere from 2 to 5%. I think might be a possibility. We will see. The other one is a continuation of that safe strategy. I will get Microsoft. Microsoft got hammered quite much lately. I think there might be a return to pick in Microsoft with a rebounds. All of them totally oversold on the relative strength index is way too down. Normally you will have a reaction up. How big will it be? 1%, 10%? I don't know. I'm pretty sure it will be. I just want to utilize this. Running with the trailing stop loss, I'm also pretty sure that when it goes up, the trailing stop loss will follow. And if I'm wrong, that things go the wrong way, it will not be the worst loss. I can easily handle it if I'm wrong, but will be good. For the third and the last tip will be a little bit more risky. We will try something called bottom fishing. We will try to get in things that is really hammered, and it's Nvidia. I don't say Nvidia is a good buy for long term. I'm just out after a short quick gain. The reason why I will try to get into Nvidia is because it had a huge volume upturn on the last part of the fall. Usually we call that a sell-off, and I think it's possible to do a rebound trade in Nvidia. All of these trades, as you hear me, maybe more so Nvidia than Apple and Microsoft, are just short term. I will try to get in as low as I can during the opening today. I will put on a trailing stop loss if I'm lucky. I will grab some percentages in all three of them. I think the Nvidia ride will be short but good. We will see. In addition to this, Sumerica and Rogers stay open. Sumerica I especially recommend if you have some spare cash. It is extremely volatile stock, high risk, so it should only be something that you are not dependent on, that you can sit for a long time. I just think it's a very good buying opportunity. As I told you last time, we did 34%. I think that I will do easily the same thing now. It's just about patience and finding the right type. These were this week's trading tips. Short summary. I think it will be a green week. I argue the oversold markets, the signals is way too low. You have to remember when things are like this, they can fall even deeper, even faster. It has to do with volatility. And the trading tips, Apple, Microsoft, Nvidia, is what I will gamble on this week. In just a week, we'll know where I'm right, where I'm wrong. Until then, just have a super duper week, and we will speak